The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index currently trading at $47,064. Bitcoin slightly up, almost about 1.4% over the past 24 hours. And the CoinDesk Ether price ETX index is at 35.39. ETH is also climbing about 3.8%. And the new DFX CoinDesk's DeFi index is trading at just under $600. DeFi is up about 3.3%. over the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Vincent Yin, co-founder of decentralized exchange zkLink. Welcome to the show, Vincent. So we're seeing that the crypto markets are stabilizing after Tuesday's correction. I wonder what kind of opportunities you have been looking at, especially in the DeFi market.
Thank you, Christine. Thank you, Lawrence, for having me today. It's a great pleasure. So Vince from zkLink. So we have seen a bit of correction from the last few days of the market. It's when we say a little correction, actually we're talking about like over $10 drop of Bitcoin and over 600 for Ethereum. However, during this correction, some assets like Solana have been able to stay in the green area despite the current market environment. So in Solana's case, this is directly due to Ethereum's network congestion, high gas fee, and of NFTs. In recent months, Ethereum gas fees have hit new record highs as retail users flock to the platform for NFT trading. We have seen a lot of attention and a lot of interest from new retail users from outside the traditional crypto market to come in for NFTs. Myself, I bought an NFT CryptoPunk for myself, recently with over 100 Ethereum. It's crazy, right? And as a result, new projects have looked to more efficient chains like Solana to launch on. So this has driven a surge in the interest in not only the chain, but also the underlying token and other related token like Ethereum, like FTD, right? Another example is the successful launch of DYDX token yesterday, which reached over 600 million in valuation shortly after launch. This signals a bullish trend for DeFi projects, even as the rest to the market slumps. In the coming week, we may see the blue chip cryptos like Bitcoin and Ethereum lag behind some of the smaller market cap assets, especially in the DeFi sector and probably in the NFT sector as well. DeFi in particular is poised for growth as traders move beyond the centralized exchanges. So this is, one important thing I do want to mention is the importance for cross-chain liquidity transfer, right? So this has been one of the main barriers for retail users to move from centralized exchange to DeFi, to decentralized exchanges. And there has been a lot of regulatory pressure for centralized exchanges. We've noticed from the last few months towards Binance, towards Coinbase, and FTX is seeking for to become a public company as well. So the cross transfer problem is to move assets from one chain to another easily and safely. If we can solve that problem, it means in the future more users and more projects, more dApps, and more protocols will become successful in this sector. So this regarding the crypto markets. Sorry?
Vince, yeah, I wanted to ask you about the crypto markets. We saw a recent sell-off in Bitcoin, and it was a very sharp decline. It was a very sharp sell-off that would indicate that it was one large order or a few very large orders all at once hitting the market. What do you think actually caused it? The idea of El Salvador as the catalyst is one thing that's been floating out there. But do you suppose that it could be, for instance, somebody who with prior knowledge to what the SEC was going to say about Coinbase? Do you think that somebody, perhaps, or a few people got into the markets and sold off before that became public? Or do you think it really is related to El Salvador? Or is there another reason for such a sharp sell-off in all of a sudden?
Okay, so it's very interesting. Actually, me myself, I have no clear clue what might be the main driving factor for this huge drop. But one thing to notice that the while liquidation accelerated some of the sell off, the impact was far lower compared with the past. We have seen the 12th of March of last year, right? So we can see that there's much less leverage in the market. And it's obvious that the market has been overheated for the past few months with increased interest from retail users, especially driven by NFTs, because it has outreached to users that is not a crypto user. It means new users are coming in for NFTs. They have a strong interest and are very curious about NFTs and also then it's reached to other tokens like Bitcoins and Ethereum. I'm not very, very sure, what might be the main reason for this sharp. But we have seen that the volatility of this market is very high. But I would say that for this time, the impact is much lower than what we have seen before. So the market has been able to stabilize, for yesterday, just a few minutes after
Vincent,
this sale.